perhaps how they're addressing that issue sustainably, among other issues. We're joined on the line by Benjamin Sia, Executive Director, Center for Management and Sustainable Energy. The interesting thing is also about the fact that if you'll be watching our Facebook page, we published a news card where Tor had secured the first 1 million barrels of Ghanaian light sweet crude for that they will refine. We've heard of energy minister says the plan is to get us close to 70%, that we can refine 70% of the product we use in Ghana locally. Well, Ben, thank you very much for your time and good morning to you.
You're welcome.
First, let's start from the energy market volatility that the Bank of Ghana is concerned about. I'm sure the managers of the economy are all concerned about, not even Ghana alone, but the world over. How big a deal is this?
Brother, it is very worrisome. And I don't want to sound alarmist, but in the month of August, we are likely not going to see better price of petroleum products in Ghana. I think we are likely going to see one of the sharpest surges in recent history. One of the most expensive prices are likely to be observed in the month of August due to this uncertain, very bullish nature of the petroleum market caused by this unwarranted war between the US and Iran. Because when I was watching the market this morning, I realized that the price of diesel, for example, had crossed $1,200 per metric. The price of petrol has also crossed $1,100 per metric. And for the first time in about 2 months, I've also seen price of crude oil exceeding $94 per barrel. So it's not a good thing for us as a country. And I think that policymakers must assess the situation, and then if an intervention is needed, we do it fast to avert any crisis that may fall the transport sector or maybe the firms and household sector who depend on petroleum products.
The interesting thing about this is the unpredictability of the situation. One moment, fuel prices are going up. The next moment, they are coming down. I saw them come down close to 11 cedis. All of a sudden, you're seeing it rise because of the unpredictability of the conflict. Anything can change at any moment. How do you respond sustainably to this kind of situation?
So that is why I always say that I've heard some argue that we need to cut, they call it one Ghana cedi levy, but when the price goes up now, we don't have any levy called one Ghana cedi levy. So the one Ghana cedi levy was introduced through 1135. 1135 was amended to 1141. So now what we have is one Ghana cedi 95 pesos per liter on petrol, one Ghana cedi 93 pesos per liter on diesel, and I think one Ghana cedi 71 pesos per liter on LPG, per kilogram on LPG. So that's what we have through the 1141. And I've heard people mention that we need to reduce it by 50 pesos. The challenge with it is that it's not sustainable because what it means is that if the volatile nature of the market benefits the Ghanaian consumer, then government goes back to parliament and say, I'm amending the act again. So in a month, you are likely going to amend the act by about 5 times, because at a point in time when prices increase on the international market, you amend the act and scrap 50 pesos. When prices decline on the international market, you amend the act and add 50 pesos. And that is likely going to cause a lot of issues in the downstream. And what I think we need to do is to have a seal, right? An acceptable price that is likely going to keep our inflation quite stable for a longer time, like what the Chinese are doing, what the Chileans and most Latin American countries are doing. So they have a seal, an acceptable seal, that as a country called Ghana or China we don't want our price of fuel to exceed maybe 15 cities, or we don't want it to exceed 17 cities, right? And if it's going to even exceed 17 cities, maybe when the price is getting to 20 cities, then government intervenes and says, okay, let's now increase the seal to 17 cities. So what they do is that they have a higher benchmark or a higher threshold and a lower threshold. And within their fiscal policy or within any act that puts certain levies on the build-up, when the price exceeds or is getting closer to the seal, then they trigger, based on the fiscal policy itself, it triggers the removal of some levies on the build-up. And when the price is lower than the lower threshold or below the lower threshold, then the fiscal policy triggers an automatic increment of the levies to ensure that inflation also doesn't decline further to certain levels. For example, if you take our Bank of Ghana inflation target, is between 10 and then 6, because the actual target is 8 plus 2 or minus 2. So when inflation is below 6, sometimes it is not in the interest of Bank of Ghana because it is below the minimum threshold. Then Bank of Ghana may even call it some kind of disinflation or deflation based on their own definition and parameters of inflation. So what I think we can do sustainably is to have a dual fiscal policy in the petroleum downstream, where we peg the upstream revenue against the downstream revenue, where the fiscal policy will be very flexible in such a way that when prices of the products are increasing on the international market, because we also produce the product here and then export or probably now domestic consumption, the revenue expected from the products produced will exceed our target because of the increment on the international market. So that excess revenue that may come will give us a way through the fiscal policy or the taxation, kind of like a VAT system, will now give us a way to reduce the levies on the build-up, whereby we use the excess from the upstream to cushion the deficit in the downstream, right? So at that point in time, it makes your prices very stable. But we operate, even though the pricing regime is very transparent, but we operate a system whereby anytime there's uncertainty, unpredictability on the international market, it affects us. And that is why we just mentioned that just last week price was 11. Next week, price is likely heading towards 20 Ghana cedis per liter for diesel and about 16 Ghana cedis per liter for petrol. And that unpredictability even doesn't help us stabilize our macroeconomic indicators. So I think that we need to critically relook at how we price petroleum. And I believe that getting a seal for it will be the better option for us, where we peg the downstream against the upstream to a balance or dual model. And at that point in time, prices become stable for all of us to benefit.
I see. Very interesting. And all this is because of a conflict that we cannot predict.
Yes, and I think that something good we are also doing is now domestic refining of our products. I think that's one of the best things. But beyond that, I think that as a country, we also need to coordinate. I'm told the ECOWAS is having a meeting in Ghana. I think the ECOWAS region needs to create benchmarking of their prices of petroleum products, right? What I mean by that is that now Dangote is doing about 600,000 barrels a day. Ghana is likely going to do about 70,000 barrels a day. Maybe other West African countries are also, Ivory Coast, for example, is also refining. Yes, I don't know the capacities they are also refining. But other African countries or West African countries are refining. Now, when we are refining, what it means is that our domestic crude feeds into our refineries. So we don't actually rely on imported crude. Then if you're not relying on imported crude, then we must set the price for our crude locally and also set the prices of our finished products locally. And if you're able to do that, you also create a barrier for this uncertain global market. The Asians have their market, either Singapore or Japan. Even the Chinese also have their market. The Europeans have their market. The Americans have their market. The time has come for us to also have our market. Because if you look at WTI, it is mostly always cheaper compared to Brent. If you look at the Singapore market, their prices are always cheaper compared to Brent. So if Nigeria is producing, Ghana is producing and feeding our domestic refineries, why do we use Brent to set the price locally? Bearing in mind that cost variations are implicit, right? So I think that Ghana, Nigeria, and all refineries in Ghana must begin to set prices or must have a benchmark for setting prices of our petroleum products so that they can fight in their countries, they can fight their wars, but that may not impact us much because we are not depending on their prices to set our petroleum prices. So while Brent crude may be 94 today, maybe the West African market of crude may be around 80, maybe around 90. Whilst the international market is quoting diesel as $1,200 per metric, maybe the West African market may be quoting diesel at maybe $1,000 per metric because the quality of the products even differ. If you go to Europe today, diesel is ultra low sulfur content, 10 ppm or below. Ghana, we are accepted to do 50 ppm. Even Tor and Co are accepted to do between 500 to 1,500 ppm due to their technology that they have. So why do we allow European market to set the price of diesel 1,200 and we use that to set for Tor, whilst we know that the quality vary, right? So I think that for us to benefit sustainably, the West African market must integrate our petroleum downstream and ensure that we harmonize all these cost elements and decide a benchmark price for all our products, be it finished products or raw products. We do that so that anytime they kill themselves there, there's a buffer that insulates us from some of these uncertain or needed conflicts that are happening across the globe.
Are you suggesting that under the current arrangement, even if we even refine everything we consume locally, we will still have the challenge of prices operating in the same manner?
So far, yes, but comparatively, no. So these are the issues that refining locally will address. One is the freight cost, right? Importing the product from the ARA areas, that is the European market, or importing it from Houston, maybe the American market. Due to the freight, the distance, the kilometers that they cover, the cargoes cover, it is quite expensive for an international oil trading company to bring products abroad to sell it within the West African market. So the freight is quite expensive. If you are refining locally, freight is quite cheaper, comparatively cheaper. And that makes the landed cost of the product also comparatively cheaper. The other part also is insurance. When the products are coming, they are insured. Now, when you are refining locally, insurance will also be comparatively cheaper. So these issues will be addressed. Unfortunately for us, MPA uses the price on the international market. So MPA uses the Brent price. MPA uses the Platts prices, what we call the petroleum Platts or trading platform prices. So that is what MPA uses in establishing what we call an XREF price. So even if Tor refines locally, well, you all know that the quality, I'm not saying Tor's quality is not the best, it's one of the best because it's accepted by the standard authority, but there's quality variation. In terms of the sulfur content, Tor does 1,500, that's 1,500. Imported products, we do 50 ppm, that's 50 parts per million, right? So if you are selling 1,500 ppm, the price should not be the same as 50 ppm. But MPA is saying that use international price that I have quoted on my Facebook or my website to set the price locally. And that is why I say that we may benefit from freight, we may benefit from insurance, but we are likely not going to benefit from the actual price of the product because we still depend on international trading platform prices to set our product's price here. And that is quite unfortunate, even though quality variations are there. So what we need to do is to begin to look at how do we set the price of our products locally. And we cannot do it alone. So maybe Ghana, Ivory Coast, Senegal, Nigeria, and other West African countries now will begin to say, because we want to insulate ourselves and ensure that there's total petroleum energy security in terms of accessibility, affordability, and availability, what we need to do is that now we have refineries. So we've achieved maybe accessibility and availability. Now, in terms of affordability, let's look at how do we harmonize our market and set our own benchmark so that based on that quality, the unfortunate part is that Burkina Faso and others even have lesser quality. Sometimes their sulfur content exceeds even 2,000. So how do we ensure that we are all within the 50 ppm or we are all within the 1,500 ppm? And because we are all within these quality specifications, this is the price for the West African sub-market, that we don't depend on international trading platforms. So they are 1,200, we are not going to take it. We are taking 1,000. Or they are 900 or 1,000 for petrol, we are not going to take it. We are taking 800. I think if you're able to do that, it also insulates us from the pricing. Aside insurance and the freight, it also insulates us from pricing whenever there is this uncertainty on the international market. And that makes sure that our prices are comparatively cheaper here compared to others. I think we need to try that because the Chinese have tried it, Singaporeans have tried, the Japanese have tried it, the Americans are using their WTI, Europe is using their Brent. I think that the time has come for Africa, especially West Africa, to lead so that we can also have our own trading price for our domestic products being refined.
Fantastic. So ultimately, it comes down to us working together. But in terms of what we are doing locally, the new steps that have been announced by TOR, and I hear Cento is doing a lot of work. How well are we doing?
Okay, so if you look at TOR, I think they say they are doing 28,000 now. They have the capacity to do 40,000 for the CDU, the Central Distillation Unit. I think they also have a capacity to do the 13,500 for the RFCC. So in all, TOR has a capacity to do almost 60,000. All right, but today I'm told they are doing 28. What it means is that in a year, they are likely going to need about 9,500,000 barrels of crude to refine. So what we've given them is about 10% of their yearly feedstock or yearly raw materials needed to operate sustainably. So what I want government to do is to continuously supply them with these products while they also find ways to accessing other products. What government has just allocated is just 10%, and I think 10% wouldn't be enough to keep them sustainably running. So doing that, I also think that Centio is also quite doing well. But you see, if you look at what Centio is doing, 40,000 barrels a day, TOR is doing 28,000. That is almost 30,000 barrels a day. It means that 40, 28, Aquaba is doing about 7,000 or less a day. Platinum is doing about 10,000 a day. So if you put the total refined products locally, I think you are likely doing about 75,000 to 80,000 barrels a day. Our daily consumption of petroleum products is around 130,000 barrels a day. So if you are doing 80,000, it means that there's still a shortfall of about 50,000 that we need to close this gap. And I'm told Centio is expanding. I'm also told TOR is trying their possible best to also expand. So if these two major companies are able to expand and do the various capacities they announce, it means that in the medium term, we are likely going to exhaust importation, or we may not import any refined products into the country. and that also means that we are doing well. So sustainability is key. Where do they get the feedstock? Now the feedstock, we are now doing around 37 million barrels a year. Ghana's allocation of the 37 million barrels is 7 million barrels, and the assumption is that the 7 million all will be pushed onto the domestic market. So if you're able to do that, I think it's a good thing for us. Now we also have to engage as a country. We have to engage the IOCs, international oil companies. These companies like Tullow, Cosmos, Petro AC, and others in our upstream to look at the Petroleum Act. The Petroleum Act section talks about domestic supply of crude oil to our refineries. I think that our refineries now have the capacity. So we need to engage Tullow and others to begin to sell these products to the domestic market, even though they can sell it at the Brent price or whatever price they want to sell it, because these are expatriate businesses anyway. They can sell it to the domestic market. So if the 37 comes to the domestic market, I think that the last time I did calculation, Centio at 40,000 barrels a day would need in excess of 50 million barrels a year. So if Centio is doing 50 million, Toy is doing 9 point something million, it means that the domestic crude production could even sustain our domestic refineries. So what policy must inform is that let's direct the crude to our domestic refineries so that the excess could be exported to South Africa or China. Because if you look at the trade data for 2025, we realize that some of the beneficiaries of our crude are China, South Africa, and India. So let's feed our local market, and then maybe the excess export it to these countries that I've mentioned. So that if the local market is able to sustain itself, I think it's also critical in terms of ensuring that prices are quite cheaper. Now, the other part I didn't mention earlier is that, I mentioned freight and then insurance. Since these products are being refined here, I think what government must also do is to reform the landed cost of the product. Is to reform the already known cost elements of importing petroleum products, so that this new cost element, due to the shorter period of transporting this product or distributing this product, will also ensure that the petroleum consumer benefits from the refining of the products locally. I think that the Ministry of Energy and NPA must critically look at certain reforms that will ensure that the consumer benefits from this refining locally. So if you're able to do domestic refining of our domestic crude, I think that it will also help. But they are doing well. Toy is doing well. Centio is doing well. We just hope that both, especially Toy, the needed corporate governance culture will be instituted to promote responsibility and accountability, and that also promotes sustainability of their management and their production.
Let me conclude then by asking you, and I'm sure you are interested in what will happen tomorrow, the media budget review. What was that one expectation you have when it comes to this sector?
In the energy sector, I think that our focus should be more on the targets we've delivered so far in 1.5 years. I think that tracking most of the objectives or targets set in the budget, we are not doing much. I think that the minister should be very emphatic on some of the announcements made in the budget. We made 1,200 megawatt thermal infrastructure. We don't know what has come of it, so we need more information. We talked about building a new gas processing plant. We need to hear more about that. We talked about reforms in the power sector in terms of introducing private sector participation. I think that target must be mentioned. We also mentioned the issue of rural electrification. We need to also hear, because there was an allocation of about 2 billion Ghana cedis for rural electrification. I think that target must also be mentioned. So I'm more focused on targets. I think that is what I want to hear. But in terms of the petroleum sector, what I think we can do is to make sure that we have a flexible fiscal policy. I think that I don't subscribe to tax, because tax cut will always encourage many amendments of the act. right? But we need a very flexible fiscal policy in the petroleum downstream that also ensure that we are always able to have stable price of petroleum products that benefits households and firms. But in the media budget, being very pragmatic, I don't think that that is likely going to happen. But the certainty is that if government listens, maybe in the subsequent budget, with the 2027 budget, we could table policy positions to ensure that we have a very flexible fiscal policy that will always make sure that our prices are stable. My expectation is that I think government must announce deliverables now, because we are in about 1.5 years of the government, and that is what Ghanaians expect from government.
Thank you. Thank you for speaking to us.
Welcome.
Benjamin Insian is with the Center for Environmental Management and Sustainable Energy. Join us on the line. As the issue of the volatility of the market, that's been a big talking point. But don't forget that government also has a loan facility currently before Parliament. A loan facility currently before Parliament that is being talked about. So there are many issues that you expect to hear about in this media budget review. We'll be speaking to our friends from Guta shortly on what their expectations are, what the current situation